Well, hello, all. Zaheer Anwari here on behalf of the dynamictrader.com. Can I get a quick screen check and mic check, please, administrator? Okay, brilliant. Thanks. And can you see my screen as well? Yes. Okay, fantastic. Okay, right. Thank you all for tuning in. Before I get into the main presentation of the analysis, if you want to know anything more, if you want to know any more about the analysis today, especially from a long-term trend trading perspective, please check out this following website, which is trendtrader.pro/apprentice. Okay, my name is Zaheer Anwari. I am a long-term trend trader. So ultimately, I look for long-term trends in the market. I use the monthly, the weekly, and the daily time frame to do my analysis. My entry and stop management is all done on the daily time frame. If we go to the to my e-signal, bear with me 1 second. I'm just going to bring this up. Okay, you guys should now be able to see my charting package. Can you guys see my my e-signal, administrator? Brilliant, thank you, Adinda. Okay, fantastic. Hi, Scott. Hi, Rafat. Thanks for coming in. I can see you guys on the chat box. If you guys do have any questions, please put them in the chat box, and I'll be happy to get back to you during the presentation. Okay. Right, so what you can see in front of you is a typical chart setup of mine. So the monthly chart at the top with the major levels of support and resistance. And I've also got the annual levels. So that's the high, the low, and the close of 2015. These are the pink lines on the monthly chart. The proprietary support and resistance tool that you can see here is highlighting major levels of support and resistance, what I consider major levels of support and resistance. And the advantage to this particular tool is that it updates automatically. So if I switch to another currency, you can see that the support and resistance levels change accordingly. So I don't need to spend hours of my time drawing in support and resistance. You know, I've got software that does it for me. On the bottom, I've got the weekly. Bottom left is the weekly time frame with the 200 moving average and the 50 moving average, and the bottom right I've got the daily chart with the 200 moving average and the 50 moving average. So what I'm looking for when it comes to the weekly and the daily time frame is I'm looking for alignment. So I want to see the weekly and the daily moving in the same direction. And how do I do that? Well, in a bear market, I want to see price trading below both the 200 and the 50 on the weekly and the daily time frame. And in a bull market, I want to see price trading above the 200 and above the 50 on both the weekly and the daily time frame. That's what I'm looking for. I'm looking for trend direction and alignment. If I have any other setup, then I tend to stand aside and I don't look to trade that particular currency. There are on occasions where I can use discretion. So for example, if you look, there's quite a bit of distance between where price is now and the weekly 200. If I can find an entry point, then I will reduce my risk because I don't have all my criteria. I want to have all my criteria met for full allocation of risk. If one or two of my criteria is not met, two elements of my criteria are not met, then I stand aside and I don't take the trade. Okay, so I try to be as mechanical as possible when it comes to taking entry points. When it comes to discretion, when it comes to exiting, I use a more discretion because I don't have take profit levels. I don't have target levels. Rather, I have levels where price moves towards. So I tend to use discretion when it comes to exiting. And I also tend to use discretion when it comes to risk allocation. So in an ideal scenario, I have all my criteria met. I allocate full 2%. If not all my criteria is met, but it still looks like a fairly good trade, then I would take the trade, but I would reduce my risk. Okay, so looking at the first currency, which is the Aussie dollar, US dollar, if I open up the monthly chart, we can see that price is trading between these pink lines. When it comes to trading, what we're looking for are high probability environments. The high and the low represent the highest price and the lowest price of 2015. In an ideal scenario, we want to find an edge That's what trading is all about. It's about finding an edge in that high probability environment where we have more chance of making money than losing money. In an ideal scenario, I want to see price trading above the high of last year for it to have a bullish bias. I want to see price trading below the low of last year for it to have a bearish bias. If price is trading between these pink lines, then I generally stand aside. I don't look to take trades because this is what I would consider a consolidating market or a low probability environment. Now, that isn't always the case. There can be discretion applied, especially if the high and the low are fairly far apart. So if you look at this particular currency, we've got 2, 4, 6, 8, 10, 12, 14. The high and the low are around 1,400 pips away. And between that, you could potentially make some profit. So if I do find an entry, I would reduce my risk. Now on the weekly, we're trading below the 50. Excuse me, we're trading above the 50, but we're trading below the 200. And then if the trend is bullish, we really want to be seeing price trading above the weekly 200. But if you look at the distance between here and here, we're looking at 2, 4, 6, 8, 1,000, around 1,000 pips. So if you do find an entry point, again, reduce your risk. At the earliest, you want to see price clear the round number 0.80 and this pivot high before you really start looking for any long opportunities. If we look on the weekly time frame, trading above the 200, so we have a bullish bias, and the 50 is acting as support. So this is looking positive. In addition to that, the 50 has now crossed over the 200 and the 50 is hooking up. So for the short term, at least, it's telling us further strength. If this continues to the upside, we've got support level here. We've got 0.8 support level. You don't want to be too quick to get into a particular trend. You want to allow currencies to establish themselves. We can see that the trend is heading up, and it's heading up quite neatly. But until it clears 0.80 and this high here, this is not a currency that I'm particularly interested in trading. If you're range trading or if you're day trading, you'll have a different approach. The problem with range trading and day trading is that the moves are short-lived. You don't have big moves. And if you don't have big moves, and if you have a small account, then traders start risking large. And that's when you start coming to dangerous territory where you could potentially blow an account. So for me, I would rather look for a few good trends rather than taking multiple trades in a day. Okay. All right. So Aussie dollar, US dollar, not one that I'm particularly interested in trading just as yet. Let's have a look at the US dollar, Canadian dollar. We can see that the long-term trend is bullish. We had a shooting star, 1.4 round number resistance, high of 2015 acting as resistance, and we're now seeing weakness to the downside. Price is struggling to break through 1.3 round number. We can see there's a bounce to the upside. If it clears 1.3 and if it clears this support level here, then we could potentially see weakness to the downside. Okay, it's trading between the pink lines, but again, look at the distance between the high and the low, quite a big distance. So any short trades that I take, I will look to reduce my risk. Now, if we go to the daily time frame, we can see that we're trading below the daily 200. So we have a bearish bias. In addition, price is trading below the 50. So this is acting as resistance. The 50 looks like it's coming to break through the 200. So that could be an extra criteria on the checklist being met. 50 trading below the 200. However, if we look on the daily, if we look on the weekly, we're still above the weekly 200. Price is trading below the 50, so that's looking interesting, but it's above the 200. So if this does start to weaken, again, you will want to reduce your risk. There is a fair distance to the weekly 200. You're looking at 2, 4, 6, 8, 10, 12, 14, 1600 pips. So that is a fair distance for a trend to develop. But as price is trading between the pink lines and against the weekly 200, any short trades, you want to reduce your risk. All right, let's move on. Euro dollar. A euro dollar is a currency that every private trader seems to be pretty much obsessed with. Here is the reason why you don't want to be trading the euro dollar. And the reason for that is because it was in trend. So from 1.4 all the way down to 1.1, very good trend. You can see significant trend. That's almost a year of trend. After every trend, price consolidates. This is a consolidating market. This is not a market that you want to be trading in. This is where you have more chance of losses. because you've got a lot of resistance levels, you've got a lot of support levels, price bouncing between levels. In addition, is between those pink lines, as already mentioned. It's just a messy looking chart. It's an ugly looking chart. If you look on the weekly, below the 200, so that's acting as resistance. So we have a bearish bias. The 50 is now starting to hook up and price is trading above it. So it's acting as support. So just a messy looking chart. And on the daily, you can see in a lot more detail. Look at all the levels of resistance and then all the multiple levels of support. And you can see how price is just very choppy, bouncing between these levels. Whereas if you look at the trend, a very clean, neat, linear trend. And look how well it respected the 50 moving average, acting as resistance. When the 50 moving average is broken, that is when we can consider a trend reversal. I held short positions from around this level here. So when price broke below 1.3, that's when I started shorting, and I exited around this level here. So I held my positions for about 9 months and a 2,000 pip leverage to 15,500 pips through compounding, and a very good percentage growth on my account. So day trading and short-term trading is very unnecessary, really, if you know how to hold positions. Okay, let's move on. Let's have a look at the Euro Japanese yen. So we can see that price found resistance at 150, so half figure, had weakness to the downside, and it's been struggling to break through this sort of 120 support level. So price came to around 121. We had a bounce to the upside, has found resistance, and is now showing weakness in the month of April. We really want to see 120 cleared. If 120 is cleared, then we could see weakness all the way down to 100, and even this level here, which is around 94, 95. So plenty of space really for that trend to develop, but wait for 120 to be cleared. On the weekly, trading below the 50, trading below the 200, so looking good. On the daily, trading below the 200, trading below the 50. So you can see here that we do have alignment in terms of a bearish bias with the 200 and the 50 acting as resistance on both time frames. So this is looking interesting for further weakness. However, if you look at the trend so far, it's very choppy, deep pullbacks. You know, it's just very, very messy. This is not the kind of trend that you want to get caught up in just as yet. If it clears, if it starts weakening further and it clears 120, what we'd like to see is a much cleaner trend. Much cleaner trend. At the moment, this is way too choppy. We want a trend like this. If you look at this area of the trend, very clean. You have small pullbacks, breakouts, continuation, a little pullback, continuation, you know, a nice flag formation, breakout. That's what we want to see. This is what I would consider a nice, clean, linear trend. Whereas if you compare it to this, it's just very messy. So we need to see the trend prove itself and wait till it clears 120. Okay, let's have a look at the pound dollar, because there's been weakness on the pound currencies. We can see weakness to the downside, but still really struggling to get past 1.40, 140, that round number support level there. If it clears that, and if it clears this low particularly, which is the low of 2009, if it clears this low, then we could see weakness to the downside. Weekly, trading below the 200, trading below the 50. Daily, trading below the 200, trading below the 50. So we do have alignment, which is good. But if you look at the 50 moving average, very flat. The reason why it's very flat is because price is just going sideways, and we can see that. It's just kind of stuck in a messy consolidation. What we need to see is weakness to the downside, and this low point cleared. Once this low point is cleared, then we can start looking for shorts. Until then, this is just messy. This is not really a currency you want to get involved in. Okay, pound Aussie dollar. Looking interesting. Weakness to the downside. So, you know, if you guys still struggling to see trends, look at this trend to the downside. Price has been weakening since 2.2. Found resistance, and just 1, 2, 3, 4, 5, 6 months of weakness so far. This is a trend. If it breaks through the low of 2015 and the round number 1.8, then we could potentially see weakness to the downside. If you look at the weekly time frame, price is trading below the 50 but above the 200, and the 200 is at 1.8. So you really want to see 1.8 cleared. You want to see this, the 200 moving average become resistance. Currently it's support. And then we can look for further weakness. Daily. Now, this is really important, guys. If you look, price is trading below the 200 and it's trading below the 50. So we do have alignment in terms of the 50 moving averages, trading below the 50 on the weekly, below the 50 on the daily, trading below the 200 on the daily, but above the 200 on the weekly. And there's not a lot of space to the weekly 200. So you might as well stand aside and wait for the weekly 200 and the low of 2015, the pink line low, and around number 1.8. You want to wait for all of these levels to be cleared. However, if you look at the daily time frame, look at the structure, and this is what I mean by change of trend and looking for a trend to prove itself. If you have a look, can you see price is bouncing a lot? It's bouncing all over the place. But look how the trend has started changing. If you look at the pullbacks now, the trend structure is very different to the trend structure from here to here. This is not a trend structure that you want, because if you do get triggered in short, you have to deal with deep pullbacks. And if you don't have wide stops, you're going to get triggered out. Whereas if you look at this trend structure, it's a much neater trend. So we want this trend structure to continue for, potentially months. This is still a very new trend. Okay, so we could see this weaken. If we look at the monthly time frame, the low point here is 2013. The high is 2015. So you're looking at a 2-year trend. So this is just a start. We could see further weakness all the way back down to 1.4 and 1.45 around these levels. Okay, patience. Don't be too excited to get in just yet. Pound Canadian dollar. Again, weakness to the downside, 2.1 acting as a level of resistance, as was the high of 2015. Seeing weakness to the downside. We've got a support level here. We've got a support level here. We got 1.8. So if you decide to get in, make sure your trade is your trade is well managed. Small risk, well placed stop losses. Know how to eliminate the risk. Take the risk off the table. Okay. If you look at the weekly, trading below the 50 but above the 200 on the weekly time frame. If you look at the daily, trading below the daily 200 and below the 50. So again, we have alignment in terms of the 50, below the 50 on the weekly, below the 50 on the daily. However, below the 200 on the daily, above the 200 on the weekly. Don't have alignment. So if you decide to take any short trades, because there is a bit of space to the weekly 200, if you decide to take any short trades, make sure you reduce your risk. Okay, let's look at the next one, the pound Swiss franc. All right, so the pound Swiss franc, you can see that it has been in a long-term consolidation between 1.6 and 1.4. It's now broken out to the downside, and we're potentially seeing weakness towards the low of 2015. Now, there have been a few occasions where there's been some sort of excessive noise, hence why we've got that wick. We had that event where the Swiss National Bank removed the peg against the euro and price plummeted only to reverse in the same period. So there is wick, but I wouldn't be too concerned about that wick. If I do get any shorting opportunity, then you could potentially look to take the trade. On the weekly, trading below both moving averages, but look how flat they are. The 200 and the 50 moving average are both very flat. And if we look on the daily time frame, trading below the daily 200, trading below the 50. So it is looking good in terms of where price is in relation to the moving averages. However, if you look at the trend, look how messy it is. If you take price action from this high point here, very choppy. What I would like to see is 1.3 cleared. If 1.3 is cleared, then we could see further weakness towards 1.1 and even further. And that's when I would also like to see the trend change. If the trend continues in this manner, then this is not a currency I would trade. But if it clears 1.3 and the trend structure stays like this, if you look at the trend structure from here, look how neat the pullbacks are. What we don't want is these pullbacks, these deep pullbacks. So I don't want price to come here and then pull back like that, back to the 50. You can see how it's coming back to retest the 50 moving average on a regular basis. Ideally, we just want to see the trend establish, a nice, neat, clean, linear trend. Which currency pair are you most interested to trade? I hope I'm answering these questions, Scott. and Trump. Are we still waiting? Aussie dollar, US dollar. Is that for me? Aussie dollar, US dollar was the first currency I analyzed, and I mentioned that the Aussie dollar, US dollar is not tradable. So I'm not sure what you're waiting for. This is the thing, guys. Don't have attachments. Don't have a favorite. That's a really incorrect approach. What you want is to be trading the best setups. So if the Aussie dollar, US dollar is not a good currency to be trading, drop it. Go and find something that is. At the moment, the currencies that are looking interesting are pound Aussie dollar, pound Canadian dollar, pound Swiss franc, and the currency that I'm going to bring up right now, which is the pound yen. The euro yen is looking fairly interesting. The US dollar yen is looking fairly interesting. All of them are looking much better than the Aussie dollar, US dollar. Let's start with the monthly time frame. And you can see that price found resistance around the 200 figure. And we've seen weakness to 160, and we're now seeing further weakness to the downside. Ideally, we want to see price clear 150 and then go all the way down to 120. Those are the levels that we want to see price move towards. Now, weekly, trading below the weekly 50 and the weekly 200. So we have both of these acting as resistance, which is good. And you can see now we're starting to see good weakness to the downside. Exactly a week ago, we were around this level here. And I mentioned, hold your horses, let price weaken. When it clears this pivot support level, then we can start shorting. If we look on the daily time frame, below the daily 200, below the daily 50, look at the weakness to the downside. Good weakness to the downside. What I need to see is price break and close below this level. It's tried to push through it intraday. So far, it's failed. But a break and a close below this level, and we could see further weakness. I already have short positions. I have multiple short positions running. And I will look to add further short positions as and when the trend develops. We've been trading this since around 180. So 180, we've been trading this. A break and a close below here, and we will add further positions. Okay, and if we have a look at the pound New Zealand dollar as well, further weakness to the downside is below 2.1, but it's between the pink lines. If it manages to get to 2 and then the pink line low, if it clears these levels, then you can look for shorting opportunities. But just not a very good looking chart, very messy. If you compare it to the pound Aussie dollar, I would rather trade the pound Aussie dollar than the pound New Zealand dollar. I would even rather trade the pound Canadian dollar than the pound New Zealand dollar. Just not a very good looking chart. Weekly, coming towards the weekly 200, below the 50, below the 50 on the daily, below the 200. So, just not a very good looking chart. Again, pound New Zealand dollar, very messy. If you compare the pound New Zealand dollar, guys, if you look at this area here, if you compare the pound New Zealand dollar to the pound Aussie dollar, look how the trend has changed. It's becoming much neater and much linear. Okay, so the pound New Zealand dollar continues to remain very choppy, whereas the pound Aussie dollar is now changing. So if you go back to the pound New Zealand dollar, you can see how it's still very choppy. All right, so pound Aussie dollar is definitely the one that I'm going to be focusing on and waiting for the right setup. And the final currency we'll look at is the US dollar Japanese yen. Again, if I just open this up, you can see weakness at previous major resistance, which is the 2007 resistance. We've had a weakness to the downside. When price clears 110, you can see right now it's trading below 110. 110 is a round number. If we get a break and a close below 110, then this will signify further weakness, potentially towards 100 and even below. All right, so these are the levels that I want to see price move towards. If we look on the weekly time frame, however, we just need to be a little bit smarter because we've got the weekly 200, and this will act as a level of resistance. So a break and a close below 110 and then further weakness, and we could look for shorting opportunities. If we look on the daily, below the 200, below the 50, nice neat trend so far from this level here, taking price out of consolidation. So if we go back to last week, where were we last week? We were on, so this is today, Tuesday, Monday, Friday, Thursday, Wednesday. We were here, stuck in consolidation. In these areas, what I say is stand aside and wait for price to break out, either to the upside above resistance or to the downside because of support. Because we're below the 200 and because we're below the 50, I favor a breakout to the downside. And that is what we've had. Okay, this is not a guarantee. This is not guesswork. This is just my understanding understanding of patterns and patterns that repeat, patterns recognition, and allowing these patterns to develop on the larger time frames. The problem is that a lot of private traders are trading on the lower time frame. Movement on the lower time frame is totally random and it's very unpredictable, whereas trading on the larger time frame has a certain element of being predictable because it's based on long-term trends. Okay. Adding new positions seems very risky. You can lose the profit you already have from previous positions. That is a common misconception. Yeah, sure. Okay. It's how can I put this? It's very simple, guys. The trend is your friend. The trend is your friend. If you focus on losing the profit as opposed to accumulating gains, then you're not going to see the returns that that you want. So when you are in a winning trend, keep on adding onto those winning positions. And if you look at the history of the charts, if you look at the history of charts, you can see how long trends are in play for. If you look at this particular trend, which is the last time I traded this, you can see that significant climb to the upside. Okay, so you just want to keep on going. You want to keep on going until that trend dictates itself that it's come to an end, as opposed to sort of keeping hold of the profit that you've made. You're not going to grow an account. Let your winning. The philosophy is very simple. Cut your losers short, let your winners run. It's what all the traders have done throughout history. Look at Warren Buffett. He's not a trader, he's an investor, but how long does he hold his positions for? He holds them for years. So you want to have that same approach with trading. Take a few trades and hold, and then compound. And don't focus on losing money. Focus on accumulating gains by adding to winning positions. Okay, that's the dollar yen. Right, so looking at the dollar yen, we can see that it's now trading below 110. If it continues to the downside, then we can start looking for shorting opportunities. There is the weekly 200 moving average here around 104. So if you decide to take any shorts before the weekly 200, reduce your risk, or be more conservative, wait for the weekly 200 to be cleared and even the figure 100, and then start looking for shorting opportunities. You don't need to get into trends too early. When you understand how to hold positions and how to compound, you really don't need to be getting into trends too early. There's far simpler ways of making profits in the markets. Okay, US dollar CNH. Is that what you want me to look at? I can have a look at it. I don't know if that's what you mean, but let's have a look. Okay, the Chinese yen is just an ugly looking chart. All right, just very choppy on the monthly. It's between the pink lines, lots of wick. This is just not a currency that I would encourage anyone to trade. If you look at the weekly, it's all over the place, no clean trends, very choppy. And if you look on the daily time frame, very choppy as well. Look at the 50, it's kind of like hooking down, it's above the 200. Price is kind of stuck between resistance and support. Just not a very good looking chart. So again, don't trade it because you've heard about it on the news or there's something coming out. Look at the charts. The charts are telling you it's an ugly chart. It's hardly any data on it for starters, because look how short the 200 moving average is. There's not enough data for that 200 moving average to go across the chart. So it's obviously, it's just not a very good looking chart. I would stay well away from this. If you compare it to the pound Aussie, the pound yen, the pound Canadian dollar, there's just much better looking setups there. Okay. Okay, guys, are there any final questions before I call time on the webinar? Are there any currencies that you would like me to analyze? Yeah, okay. Warren Buffett buys a stock when it's cheap. Yes, I understand that. But Warren Buffett buys and then he holds. He's still going in the direction of the trend. If he buys and then the market goes against him, like Tesco, for example, Warren Buffett lost a lot of money on Tesco. So he got in at a particular value, which was what he considered a low value. And then he wanted the value to go up. Whereas the market went against him and he lost a lot of money. Warren Buffett, is a a value investor. I understand that. But the point is he holds positions for long periods of time and he compounds into the trend. Warren Buffett is worth $80 billion. He's 80 years old. When he turned 50, he only had $300 million. How can you go from $300 million to $80 billion? You can only do that through holding positions and compounding. You're not going to see Warren Buffett sat in front of his computer, scalping away and day trading away. It's not what he's going to do. Warren Buffett goes against the trend. If you're talking about Warren Buffett goes against the trend, what you mean is that Warren Buffett's going against the grain of what most people are doing. Yes, not necessarily against the trend. What do you see for the SP? What do you see for the SP? What is SP, please? Could you explain what that is? I'm not sure what SP is. Oh, the S&P index. All right, okay. Let me see if I can bring this up. What is the oh, let me see. SPX, is that it? Yeah, there you go. Right, S&P 500. Okay, first of all, guys, I don't trade indices. Okay, I don't trade indices because I would rather trade the stocks that make up the index. So, looking at S&P 500, why would you want to trade one chart when you have 500 stocks available to you? In addition to that, this is when you wanted to be trading stocks. Look at the run up. This is what you call a bull market. What is happening right now? It's consolidating. It's trading between the high and the low of 2015. As already mentioned, when price is trading between the high and the low, this is a range market or a consolidating market. You don't want to be trading these markets. This is not where you're going to make money. You want to make money when the markets are in a bull run or when they're in a bear market, not in a consolidating market. So as for the S&P, A, I don't trade it, and B, it's an ugly looking chart. So not one that I would encourage you to be trading. Wait for the breakout. If you want to trade the euro yen, which other pair have the opposite correlation to euro yen? Opposite correlation. I don't know. I mean, in terms of looking at correlated pairs, what I would do is just trade the best setups. So if you think about it, all the yen currencies are currently moving. If you look at all the currencies, euro yen, CAD yen, Swiss franc yen, pound yen, dollar yen, Swedish krona yen, Singapore dollar yen, Turkish lira yen, anything that is paired to the yen, they are all currently moving because that's where the trends are. However, what did I look at? I looked at the euro yen, the dollar yen, and the pound yen because I've identified those three currencies as the best currencies to be trading out of all the yen currencies. Okay, so in terms of what is opposite to the euro yen, I wouldn't really look at it that way. I would just look at what is the best setup. And if you have found, if there is a currency that moves in the opposite direction, let's say, for example, Canadian dollar and gold, Canadian dollar and oil. Yeah, so the dollar CAD, the loonie and oil, they move in opposite directions. You don't want to be trading both of them. Trade the better setup. Trade the one which is the neater trend. Trade the one which has least support and resistance levels ahead. Trade the one you can hold for longer and you can compound longer. Don't trade both of them. Okay, this is where trading is really an art. This is where portfolio management comes in. This is what you really understand what you're doing. Gold. Okay, XAU. Okay, so if you look at gold, the last time I traded gold for many years, and I traded gold for many years when it was in this bull run. Since then, I've not traded gold because, okay, there was a little bit of a trend here, but since then it's been very messy. People are obsessed with gold, but you can see why right now you don't want to be trading gold. It's all over the place. The thing to note about commodities is this: they trend for long periods of time, they consolidate for long periods of time. So I'm not interested in trading gold until it breaks 1500. When it breaks 1500, then I'll start looking for long opportunities. If it breaks below 1000, then I'll start looking for shorting opportunities. For now, this is just range bound. It's between the pink lines and it's very choppy. I hope you guys can really start understanding what I'm saying here, guys. You should really be identifying which is the better trends, okay? Pound dollar. Oh, thank you. By the way, euro pound. I forgot to look at the euro pound. The euro pound is definitely should be one that's on your watch list. If you look at the euro pound, strength to the upside. It's gone through 0.80 and it's broken. It's contesting this level here, this pivot support level here. It's looking to push through it. Wait until you get a break and a close. Don't just go in on a break. You can see it's tried to break through it, but it's been pushed back down. So wait until you get a break and a close and then look for long opportunities. If you look on the weekly time frame, it's looking interesting. Weekly, it's broken through the weekly 200. So this is acting as support. The 50 is acting as support. We're seeing strength to the upside now. And if you look at the daily time frame, trading above the daily 200, trading above the daily 50. So we have alignment on the moving averages. What we now need is a good entry point. And a good entry point is when this support level, which is now resistance, is cleared and it becomes support. Then we could start looking for long opportunities towards the next resistance. And this is when I'll continue to compound, hold and compound. Okay, the one thing to note is that the daily is still quite choppy. If you look at these periods, there's quite deep pullbacks. So, you know, make sure you have well-placed stops that allow you to contest these, deal with these pullbacks. But ideally, what we want to be seeing is the trend to be quite neat and linear. So as these levels are cleared, as resistance levels are cleared, we want to see a much neat linear trend. Okay, so, and again, if you're trading the euro pound or the pound dollar, trade the better setup. I would rather trade the euro pound than the pound dollar. Which is the best for trend trading? Currency, stocks, or commodities? Scott, really good question. The answer is all of them. Don't limit yourself to one market. This is the kind of information that people need to know and people need to understand. Market makers move money from market to market. If you're just focused on foreign exchange 365 days of the year and you're only looking at the euro dollar or the pound dollar, or you're looking at some obscure currency like the Chinese yen, you're not going to make money consistently. You'll make money and you'll lose money. You'll make money, you'll lose money, and then you just won't get anywhere. You'll start over risking, over leveraging, frustration kicks in, you blow an account. What you want to what you want to be trading are the markets and the instruments that the market makers are on. So if the market makers are in stocks and those are where the trends are, you trade stocks. If the market makers are in commodities, you go to commodities. If the market makers are in currencies, you go to currencies. You have to know where the money is. This is all part and parcel of trading. Simply being focused on just FX 365 days of the year is not going to make you consistent growth year in, year out, because there'll be periods where there's no money in currencies because the money's in stocks. Okay, guys. Thank you so much for all the questions. Thank you so much for the interaction. I really appreciate that because, you know, sometimes there's absolutely no interaction in these chat boxes. So I don't know if anyone's even listening to me. So Trump, thank you for the questions. Have you, Low, thank you, Scott, thank you, Sol, thank you. I hope I answered all of your questions. Yeah, thank you. You're welcome, Scott. You're very welcome. I'm just going to direct you guys to a few social media pages, please. And something that you guys, I think, will hopefully find very useful is, so I've already directed you guys to the apprentice training. So if you want to really get to grips with trend trading, if you want to get involved in a strategy, then this is the place to start. Okay, it's £99 for a month of training, okay, a whole month, and you walk away with a strategy. All right, there's a lot of information in here, in-depth training, trading tools, community, webinars. There's just a lot of information, all from a long-term trend trading perspective. Now, before you come onto the training, please download the ebook, guys. trendtrader.pro/ebook. This is a great place to start. Everything that I've talked about, technical analysis, chart patterns, candlesticks, moving averages, all of that is all explained in this 60-page ebook. You're not going to find the information that you find in this ebook anywhere on the internet, because trend trading is very unique. There's very few people who understand that, because since the creation of the internet, everyone is going down the route of day trading, everyone, and that's not the way to do it. Okay, please like my Facebook page. So if you go to this Facebook page here, please like the Facebook page, guys. And if you scroll down, you'll see lots of Facebook live recordings that I've done. What is trading in its purest form? These are all recorded. How many trades should you take a day? What should be in your trading plan? So there's just a lot of recorded videos. These are all they're all live that I do twice daily. So please like the page. Please follow me on Twitter at Zaheer Anwari. Please also like our @Dynamic Trader page, Twitter page. Please follow us. And in addition to that, if you are on Instagram, please follow me on Instagram on fx.mental. Okay, so there's lots of information about me out there. If you want to connect, if you want to know more about trend trading, then please connect, guys. It really is the most beneficial, the smartest, and the simplest way for us as private traders to be making money. Get away from day trading. It's not the way forward. Okay, guys, thank you all very much for your time. Thank you all for the webinar. Thank you, administrator. And have an excellent end to the week. And I will see you all next Wednesday. Thank you, guys. Take care. See you later. Bye-bye. Thank you, Adinda. Bye-bye.